Hi, I'm Michael Glennon from Glennon Capital. Last week we spoke about how we're coming into a period of very heavy capital raisings for smaller companies. And continuing on with that theme, I was talking with a client of ours last week who mentioned the impressive growth of a certain small company. So I thought that's a good sign for us to do some work on. I was familiar with the company, I hadn't looked at it for a couple of years. And certainly that company had a market cap maybe 4 or 5 years ago of about $100 million, and today it has a market cap of slightly over $400 million. However, the interesting point about this company is while that seems like impressive growth, you can't just look at the market cap of a company, because what's actually happened when you start to drill down into the numbers of this business is they've actually raised $350 million of new capital. So that adds onto the $100 million market cap another $350 million. So in actual fact, you then need to start to have a look at the earnings per share in the business, and earnings per share in this company have actually gone backwards over a 5-year period. So what has been very successful is the company has grown from a $100 million company to a $400 million company. All of the key executives in the business are now paying themselves significantly more than when the company was a $100 million company. So it's been a very successful investment for them. But for individual shareholders and the profit per share, their earnings per share has gone backwards over the last 4 years. So the company is really not a successful investment, it's just a bigger business. And anyone can go out there and raise capital, but buying good businesses, one of the things we look for is to see growing earnings per share coming back to shareholders. So while profit might be growing in a company, and people talk about a company earned $10 million last year and $20 million this year, you can buy profit, you can buy earnings. You need to make sure that the earnings per share and the return on capital for each dollar that's invested is growing incrementally or at a very strong rate. So that's one of the things we look for. Just worth pointing out, not all earnings are good earnings. You need to make sure that there's earnings per share growth, which then will translate into PE re-ratings and successful investments. Thank you for watching. I'm Michael Glennon, and if you want to see more, look at our website or follow us on YouTube or Facebook. Thank you.